because someone has to pay for the tariffs, and it will be someone in that chain that I mentioned between the manufacturer, the exporter, the importer, the retailer, ultimately somebody putting it into a good of some kind, or just the consumer buying it.
What's up, what's up, what's up? We got Jerome speaking early this morning at the Global Banking Conference. So let's get into it and see and break this down.
That because that's what businesses say, that's what the data say from past Epstein. So we know that's coming, and we just want to see a little bit of that before we make.
And I got to get everything set up first before I go back over there to him. So let me get that together first. Let me see. Let me go back here. I want to go to the economic calendar to see what's going on today before I actually get into it. Let's see. Yeah, I hope y'all having a great day. It's 8 o'clock in the morning, and we off to a good start so far with everything that's going on. Will Trump fire Jerome Powell? I don't think he got the ability to fire him, but hey, that's a good topic that we need to talk about. See what the people think about Jerome Powell. Should he get fired? He is the, head chair of the financial institution. So do his expertise have any, everybody wants the race to get cut, but he is the expert here, Let me see. Now I'm going to look at the economic calendar. Let's see what we got going on. Let's see. Share this instead. Okay, this is the economic calendar. And for today, it's nothing but Jerome Powell. Opening remarks at the banking conference. Fed Chair Michael Bowman moderates panel at the banking conference. So that's the big thing that's going on today, guys. Is this banking conference with Jerome Powell speaking about interest rates, when he gonna lower them, things of that nature. But of course, he's waiting to see what's gonna happen with the tariffs. So I think that we need to just calm down a little bit and let Jerome Powell do his thing. Because, as we already know, it's going to take a little bit of time to see if these tariffs really going to hit. Like right now where I'm at, everything is stable. Nothing is going up. Nothing is really going down. It's like stable, but we still got to wait a little bit to see what the effects of these tariffs going to be. A lot of people that come into the comment section are saying that in their areas, prices are going down. So in my area, prices are the same. Prices are the same in my area. So let me see. Let me get back over here and let's listen to Jerome Powell.
Yeah, I've had a lot of experience in my prior careers, with headcount reductions and things like that. And this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. I think the Fed will be fine. I think no one will notice any decline in our ability to carry out our missions. And I think it's just us wanting to demonstrate to the public that we are actually good stewards of their resources. We're effectively wiping out 10 years of headcount growth with this. So, we wanted to show that, that we're good stewards.
How is progress on reducing headcount going so far? Are you on track to meet the goal?
We're just at the very beginning. As you know, we're doing a buyout program. We're going to hit that goal. I think many organizations find that they can do this. You don't want to do it every year or anything, but you can do it at intervals, and you wind up not interfering with your ability to perform your jobs.
We were not confident in the accuracy of the novel.
And Chair Powell, Claire Jones from the Financial Times. As you're no doubt aware, the Senate Finance Committee has tabled its version of the reconciliation bill this week, and I was wondering if you could tell me a little bit about the tenor of the debate at the FOMC over the past few days on fiscal policy and the degree to which that influenced people's projections for 2026 and beyond. Thank you.
Yeah, so, we don't sit around and debate or really discuss. We take fiscal policy as fully exogenous, and so we actually really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, it's. Remember also we have a very, very large economy, and the effects will be at the margin. I expect that they may already be in, but they will be in by the next meeting. We'll make an estimate, but it's not a major thing. It's nothing that we discuss. It may have been mentioned a couple of times, but as something that's coming in. But I think the outcome is, we don't know the outcome yet there, so hard to be real specific.
The leverage ratio is now a frequently binding requirement of our institution.
Thanks, Chair Powell. Neil Irwin with Axios. There have been some cutbacks in economic statistics collection in the last few weeks, and worries that long-running problems around funding and response rates may be getting worse. How much is this concern on your radar? How much confidence do you have that the gauges you're watching to assess the economy are reliable right now?
Two things. One, the data we get right now, we can do our jobs. I'm not concerned that we can't do our jobs. That's not the point. The point really is that we are starting to see, so we actually, really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, it's.
So,
many, many years in this whole project of measuring and understanding what's happening in our very large and dynamic economy. And I hate to see it.
hold on a second, guys. I got to get this back together. Kind of messed up.
deepest, most liquid bond market in the world. Stands at close to $30 trillion today and growing. So supporting a resilient Treasury market is important for the broader financial system, which we're all invested in.
All right, I'm back. I had to reset
There are
everything.
two key tenets to that.
What up,
One is
Jonathan
safety
Davis?
and
What up,
another is
Don?
liquidity. In terms of
Yeah, I
safety,
had to
there
reset
are
a few
a range of
things,
enhancements already
but
in
we
flight,
back now.
including the central clearing mandate. In terms of liquidity, supporting and deepening the market for Treasury securities, which is growing, is critical. In our seat, knowing that a Treasury security can be converted to cash easily, quickly, and in all market environments is so important. And that's all predicated on an ecosystem of buyers, holders, sellers, intermediaries. And the intermediation of Treasuries is particularly important in periods of stress. At BNY, we have a unique vantage point into the Treasury market, and we do see
That's why it's good to
elevated
have
Treasury
multiple
volumes in
streams.
periods of market
I mean, not
uncertainty
multiple
or stress.
streams, multiple
In those
streams,
periods, the market
so you
is
can see what's going
operationally
on.
resilient, but we have seen
With your
periods
audio,
of
with your technical,
funding market pressures or
all a part of
dysfunction.
being a streamer.
And that tends to stem from an imbalance of buyers
To
and
have all
sellers
that
in the
ready to
market.
rock and roll.
So it is exactly in those moments where having intermediaries who are ready, willing, able to support the Treasury market and the continued liquidity in the market is most critical. So that brings us to the topic here today, leverage reform. Leverage ratios across the supplemental leverage ratio as well as the Tier 1 leverage ratio in their current construct can disincentivize banks from intermediating Treasuries during those periods of stress, exactly when it's needed most. And another dimension to this is typically in those periods of volatility, there's also heightened balances typically of cash or deposits on bank balance sheets. So banks' ability to act as a shock absorber for both cash and Treasury securities can be constrained by leverage ratios as they're constructed today. Now, the proposal offers solutions to that, and there are a couple flavors to that, and there are considerations for each. One flavor is to lower the overall leverage requirement, and that does create extra capacity for banks. However, banks still have the discretion on how to use that capacity, and it may not be there in a period of stress. Another flavor is to specifically target cash and Treasury securities and exclude those particular assets from the leverage requirement. And in that case, it's a more direct support for Treasury intermediation and for banks to act as shock absorbers for cash in those periods of stress. Now, I'll posit that leverage reform is one facet of a multifaceted approach to support market liquidity. It really goes in harmony with public and private solutions, including government facilities, such as the discount window and the standing repo facility, as well as private solutions, including recent innovations such as early morning repo or intraday repo. So taken together, as I take a step back as a treasurer, every day we're focused on resilience and we're managing a range of risk measures: capital, liquidity, interest rate risk, just as I mentioned. And that's just to name a few. And we're thinking about a wide range of scenarios. We like to say, better to prepare rather than predict. If I extend that lens to reforms, and having reforms that are also supporting resilient Treasury markets in a range of scenarios, that really leans towards taking a holistic, proactive approach, looking at all banks and targeting the risk at hand. And that'll help us target a future shock, because we all know that no two stresses look exactly the same. And so with that, that holistic and proactive approach and discussion is exactly in the spirit of this dialogue today.
Thanks, Tiffany. This issue of exemptions for certain safe assets versus lowering of the leverage ratio number itself came up at our dinner table last night, and there was a range of views, but rather than trying to review those, I'd like to get the views of our panel. So how about a quick run of the panel on whether exemptions in addition to or as an alternative to the proposal would be beneficial overall?
So I would be concerned about exempting treasuries because of the interest rate risk that could be encouraged. Banks would be encouraged, I think, to take with just exempting treasuries entirely. Now, I'd like the alternative in the proposal for exempting treasuries in the dealer that are on the dealer's books that are marked to market and subject to the capital, the market capital requirements. But just a blanket exemption of treasuries, I think, would raise other issues that need to be addressed.
Brian, do you have a view?
Yeah, I would just say, while the proposal creates significant capacity today, there could be future states of the world where ESLR became binding again, at least on some banks, and it would be helpful to have something countercyclical to offset that. The trade-offs between different solutions.
Hal?
I prefer the approach that was taken rather than exemptions, but I would say with respect to any of these proposals, we need better data on exactly what the impact of them would be on liquidity in the Treasury market in a crisis, given the fact that the dealers only account for, not a lion's share of this market to start with.
And Ben?
In terms of specific exposure exemptions, I think it's important to think about that in the context of the broader framework. We discussed earlier the fact that under the narrow exclusion, there would still be the market risk capital requirements, but also there are many other aspects of the regulatory framework. There are also many aspects of the supervisory framework. So looking at what else is there to address the concerns if there might be exemptions for specific exposures, more of a holistic view.
Yeah, again, we haven't been able to get much disagreement. There was an intriguing remark last night at our dinner table on the implications of exemptions for Treasury securities, which is that in the international financial stability framework, some other countries might be tempted to also depart from the general spirit of the SLR, exempt their own government securities, and in some cases that might have adverse implications for international financial stability. So I'm going to turn next to Brian, and I want to address the issue that's come up already, which Tiffany mentioned, which is resilience. That resilience of the Treasury market to events like March 2020 have been more prominent in the interagency working group papers on Treasury market reform than everyday liquidity. Do you think the proposed reduction in the ESLR is likely to improve Treasury market liquidity on normal days? Would the proposal improve Treasury market liquidity during a crisis? Is there an advantage, and I think you alluded to this a moment ago, to waiting for crisis conditions, as in March 2020, before lowering or exempting from the SLR?
Yeah, great. Thanks, Daryl. And also, thanks for having me here to speak today. I appreciate it. So I'd say Treasury market liquidity today, normal times, is generally working fine. You could look across a lot of measures, on the run, off the run, spread, market depth, swap spreads, futures basis, all kind of operating fine today. That said, banks are economic actors, and to the extent there was client demand and you had a significant increase in leverage exposure capacity under the proposal, then I think at least at some of the GSIBs there could be incremental capacity deployed to low RWA activity, which could on the margin improve liquidity on a normal trading day. I wouldn't expect banks to go out and buy a bunch of long duration for their banking book, but think client financing, client intermediation. In terms of the second point around crisis, you mentioned March 2020. I think that's a great example, right? It seemed like balance sheet constraints were contributing to a deterioration in market liquidity, and regulators stepped in, much to their credit, and provided temporary relief, and that helped facilitate a return to activity. So I think a SLR that is not regularly binding certainly could and should help reduce the likelihood of a dysfunctional Treasury market in periods of stress. That said, it's just one piece, Daryl. I know you've written and testified about a bunch of the other pieces, so it's not just the one silver bullet, but I do think it would be a helpful part of that process. And then in terms of that final part about is there advantages to kind of acting before or waiting. I do think it's helpful to have some countercyclical part of it. There's different ways to do that. There's the narrow exemption in the proposal. I think the Basel standard allows for exempting reserves in certain situations. Both of those have some advantages and disadvantages. You're picking winners and losers between low RWA type activities, which can cause some market distortions. You could bucket all low RWA activity together and exempt that as a group, but that could hollow out the rules. So you might need to change the requirements. There's different things to do there. You do a countercyclical buffer, or just wait for the next crisis. Generally, I would say the market doesn't like uncertainty, and generally, I would say it's maybe not great policy to be working on emergency measures to the extent that that path could be.
Hey, what's up? What's going on, y'all? If you're just now joining, they're discussing the changes that's coming to the banking system. That's what's happening right now. The Federal Reserve, they're having basically a meeting on the framework for large banks. The changes that are coming to these large banks. That's what we're watching right now.
That the economy is weakening, and that is a reason to cut rates going forward.
So we do of course monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5–2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market, and that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very, very slow continued cooling, but nothing that's troubling at this time. But we watch it very, very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that there are concerns inflation will rise, but there is the alternate scenario that tariffs would create demand destruction and slow growth sufficiently, and that would perhaps keep a bit of a lid on inflation. Do you see odds of that scenario? What kind of odds do you see of that scenario coming true, and how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place? So
this is very much the conversation we had today and yesterday. There are many, many different scenarios, many combinations of scenarios where inflation does or doesn't prove out to be at the levels we think, and where the labor market does or doesn't soften. And I think what you see people doing is looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for any of the rate paths, I think, that you see in the SEP. And we do this once a quarter. It's a hard thing to do particularly at this time, but it does reflect. If you see somebody writing down a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
Thank you. Mr. Chair, I wonder if you could describe for us some of those scenarios. How do you get to a place? I'm noticing that the uncertainty levels in your forecasts are very high. How do you get to a place where you have the confidence in the outlook for say, inflation and/or growth or the unemployment rate, how many months does it take, and what do you want to see in the data to get to that level of confidence to actually reduce rates off the restrictive level?
So it's very, very hard to say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they do over coming months. And I think that's going to inform our thinking, for one thing. In addition, we'll see how the labor market progresses. So at some point it will become clear. I can't tell you exactly when that will be. And, meanwhile, we'll be watching the labor market very carefully for signs of weakness and strength.
Level. It's a balance between the two. So the proposal would therefore have greater consistency with the structural focus on the holding company. There'd be more alignment with the resolution strategy for GSIBs. And from that perspective, there'd be the perspective to potentially have reduced fragility and stress, promotion of the resolvability of GSIBs, and therefore positive financial stability implications.
Thanks very much, Ben. What about other reactions? Is the fact that the dollars of reduced capital at the holding company is small relative to the depository institution, is that important? Is there sufficient flexibility in capital in the structure of a bank holding company and its subsidiaries? What are your views? Hal, do you have a thought on this? Do you have a thought on this, Hal?
Yeah, so as you said, Daryl, the reduction of the depository level was much higher than the reduction at the holding company level. But I think we need to keep in mind the basic framework in which the holding company of a bank has to serve as a source of strength for the bank subsidiaries. So even though you are reducing the capital level at the depository institution subsidiaries, you have the holding company still with this obligation to support the subsidiaries. So I'm not that concerned because the holding company capital is not being reduced by very much at all.
Don, a thought?
Yeah, so I agree. The fact that the holding company capital is basically unchanged is reassuring. I do wonder about the source of strength thing, though, Hal. I mean, once the capital is upstream from the depository to the holding company, downstream to the broker-dealer, or if it's not downstream to the broker-dealer, it won't do any good, right? So presumably the intent of the authorities is to have it downstream to the broker-dealer. Then you have a crisis. You have something happens that no one's anticipated. Are they really going to take the capital back from the broker-dealer and give it to the depository institution? In 2008, the board was asked to vote several times on exemptions to upstream capital from the bank to the holding company to support the broker-dealer. So I think we need to think more carefully about whether the holding company would be actually a source of strength in a crisis situation.
Tiffany.
I think that all folds together to the fact that each bank is managing to multiple risk measures, capital being one, but liquidity, interest rate risk, and other measures will also support both the IDI as well as the holding company. So all of those various constraints ultimately inform how much could potentially be upstreamed or not. So there are additional constraints as part of a holistic risk framework that we are thinking of as well.
Thank you, Brian.
Yeah, I would just add, to Ben's point, the resolution framework for a single point of entry is meant to capture sufficient liquidity and capital at the intermediate holding company to avoid the situation that Don is talking about. Can it effectively do that? It's not clear. Disclosure's not great in that area. So another area where it might be helpful to have more robust discussions around that to give more confidence to more participants that actually could work.
And that's about resolution. So you're in a situation where you're managing a failure. So it would be nice to prevent the failure in the first place.
Ben, did you have a remark on that?
My only observation is I did refer to reducing fragility, and that's part of the benefit of potentially having greater flexibility. I mean, implicit in that reference to fragility is the possibility that the point of non-viability is higher in 2015 than it was in 2008. So that's, again, a reason why I think it's beneficial to consider the capital framework alongside the resolution framework.
Wow, very complex topic. Don, I want to turn last to you, and you have been an advocate for reducing the SLR in order to make sure that it remains a backstop, as we've discussed, and doesn't impede the willingness of dealers to make markets in treasuries, as we've also discussed. But you've also noted an important caveat that any adjustment does not reduce resiliency of the banking system. So when you look at the agency's proposals, how does it stack up against these criteria that you have in mind?
Thank you, Darrell, and thank you for inviting me to be part of this panel to the Vice Chair. So you're right, I've long supported enhancing Treasury market liquidity by making the leverage, the SLR, a backstop. In fact, a senior Federal Reserve official told me a couple of years ago I was using too much of my brain space on the leverage ratio. So I'm grateful to have that space freed up for something else. But as you noted, my support has been couched in the context that it not reduce overall capital requirements and resiliency. And I think I take quite a bit of comfort from the fact that there's no reduction in the on the holding company level. But I do think, as I just noted, there are things we need to think about. And I still have a few concerns on this overall resiliency issue that I'd like to surface and I hope come up in agency's consideration. First, obviously, making the SLR a backstop puts extra pressure on sound risk-based capital requirements. And I think financial sector resilience is especially important right now. The economy could well be on track for good growth and low inflation. That's what's priced into financial markets. But we shouldn't be lured into complacency. Secretary Bessent last night worried about pro-cyclicality in financial markets. He cited private credit in that regard. But we know banks and bank regulators, from history we know banks and bank regulators are not immune to this particular disease. And the tails of the distributions around the central tendency seem unusually fat as we are in uncharted waters with respect to the evolution of the global trading system, the ratio of federal debt to national income, and challenges to the independence of the Fed. So I think the risk of unanticipated developments are particularly high right now. And it would be preferable to evaluate this proposal as part of a holistic review of all capital requirements. In that respect, this is a terrific conference putting all this together. There's so many in the risk-based capital. There's the Basel III Endgame GSIB requirements and the stress tests, and how are they all going to fit into this? So were risk-based capital requirements the first line of defense weakened, I'd need to rethink my support for reducing the backstop, and I urge the agencies to.
And the whole banking system is on the verge of collapsing, guys. Nobody's putting money in the bank. There's no velocity. Interest rates are high. The banking system needs to change or it's going to collapse.
Thing is encouraging banks to buy Treasury securities, so it does expose them to added interest rate risk, widespread losses on Treasury and agency securities contribute not only SVB's problems, but the risk to the broader system that triggered extraordinary actions by the authorities in March of 23. So banks should be required to mark securities in the available for sale portfolio to market, and the available for sale portfolios should be subject to market risk capital requirements. Bank interest rate risk management, even for the hold to maturity portfolio, should be subject to close scrutiny. And as I noted, my concern about interest rate risk would would make me very reluctant, would make me opposed to exempting all treasuries from the leverage ratio.
So the gist of your remark is that you want to see the whole package before a final view on it.
Yes.
Yeah, interesting. And other, Hal, what's your view on this?
So I think we need to keep in mind that the U.S. banking system is today very well capitalized. U.S. GSIB actual capital levels have increased 17% over the past 2 years, and our minimum capital requirements are now 1.7 times higher than the Basel requirements, 837 billion versus 473 billion under Basel, because of our stress testing regime and gold plating. Keep in mind that we gold plate the Basel requirements. This proposal does not reduce risk-based capital. It merely moves leverage into the background where it always has belonged, and in my view, we could do away with, okay? And if it's in the background, you can further say, why do we need it then, if it's now in the background? It's not binding anybody. Okay, so anyway, I think overall the U.S. banking system is in a very good place today in terms of its actual capital.
XRP system.
Hal, you mentioned gold plating. I'd like to get a reaction to something that came up, another topic that came up at dinner last night, which is the implications of the SLR and other
I think that if they can make it
on
like
the ability of
crypto
US
more
banks to
safer,
compete, both with non-bank financial institutions and with international
XRP and all the
banking
rest of these
institutions.
cryptos
First,
will be fine.
is that competitive angle, does it figure in your minds as an important aspect of the rule change? And secondly, is it actually true that U.S. banks have been at or GSIBs have been at a competitive disadvantage because of the capital requirements that we've been discussing?
Gerald, quite frankly, don't know the answer to that, but I would be skeptical. I think there are a lot of other factors that affect competitiveness. I mean, you know, when we originally adopted Basel, it was because of competitiveness concerns with the Japanese banks, right? And we said, well, get them on an even playing level, they'll have to have the same capital level as we do. But then it turns out they have different accounting systems, they have different government subsidies, they have different forms of regulation, they have nothing to do with capital. So you have to add all of that into the picture when you're thinking about competitiveness.
Any other reactions on competitiveness? Ryan.
I would just say, certainly we have a higher SLR requirement than other jurisdictions, although that does not seem to have stopped our banks from competing very well against a lot of the international banks. I think certainly non-bank financials have, significantly increased their scale and scope in some of these businesses, and obviously they don't have the same regulations, so that might have merit.
Yeah. And moderators don't get to vent their own views, but it does seem like better capitalized banks are better able to compete in principle.
Yeah, that was the point I was going to make. I don't think the UK, European, Japanese banks would think that they're at an advantage because their capital hasn't been gold-plated. I think the U.S. banks are pretty much competing very, very well in the international field, and there are times when being well capitalized, having high capital is to your advantage because, of course, under stress, there's much less to worry about. And we saw that in the U.S. in the March 23 situation where deposits fled from regional banks where people were concerned about the embedded losses on treasuries and other things, and they fled to the GSIBs. And some of the commentary, well, that's because the GSIBs are too big to fail. But I think it was also because the GSIBs were much better capitalized and much, much less likely to fail.
Okay.
I'll make one observation, which
Yes,
is
go
that
ahead, Ben.
I do receive a lot of questions about the
I'm up more
regulatory
than
capital and liquidity
300%
treatment about
on
particular transactions or
XRP,
products and things of that
but my
nature.
main
And that does
holdings
clearly
are
illustrate
physical
that their
gold and
marginal
silver.
incentives and essentially what the marginal capital cost, liquidity cost does factor in. That's not necessarily contradictory, but I think it does show that that actual marginal effects of
Yeah,
regulation
on
do factor into business
crypto,
decisions. And there are
mostly, I
differences
mean, if
between
you
U.S. and non-U.S.
bought
requirements.
crypto,
Tiffany at the
especially if
Global
you
Bank.
bought it in
Well, I was going
before
to
2020,
re-highlight some
everybody's
of
looking
Don's
really
points.
good right about now.
One being completely support interest rate risk management. It's a strong pillar. It's an important risk pillar. And as I mentioned, it's an important part of the overall risk management framework for banks. Second, the holistic review, I think, is an important point as well, because we find that, again, managing to a lot of risk measures, making a change to one risk measure is likely going to have another become binding over time and could have the same constraints, let's say, on the treasury market. So I think that holistic review is also makes a lot of sense.
Terrific. Okay, I think we got a pretty good sense of the views of the panel, and I think it's time to turn to you all. If you have a question, would you raise a hand? I see there are microphones. Would you also please identify yourself and try to keep it to a question, just one. If we have a second round, we can come back, and not a speech, just a question, please.
The thing about crypto is people got to understand that
my name is Guowei Zhang. I'm a
you have to take it off of those, like Coinbase and all those crypto brokerages. You got to take it off of there and put it on the leisure. That's what people got to understand. But I do hope that they regulate it a little bit to make it like it's safer.
Okay, I'm going to ask anyone that can address that question, because I don't want to handle that one. Hal, do you have a thought?
All right, so once again, we are listening in live there to the Federal Reserve Conference. This coming after President Trump threatening to fire Chairman Powell, and after GOP Representative Luna referred Powell to the DOJ for alleged perjury. But what we're listening into here is this conference that is aiming to provide expert perspectives and foster this discussion on changes to the U.S. banking system. We'll head back to that in just a moment. And if you are just joining us live now from Fox, thank you so much. We'll be right back.
The question is, do y'all think that Trump should fire Jerome Powell? You know, Jerome Powell is the expert, and Donald Trump is the big-time businessman, billionaire. But they're uncertain because they thinking that these tariffs are going to affect the interest rates. So we got to wait and see what's going to happen. We got to wait to see what's going to happen. But Donald Trump wants Jerome Powell. Well, a lot of people want Jerome Powell to drop those interest rates ASAP. But so we got to see what's going to happen. Appreciate y'all for joining me. This is a good educational conference that we got going on. If you listen to it, get my understanding is that the banking systems are really catching it right now. A lot of people don't even use, or they can't use, the banking system is getting less deposits, so it's not really that much traction. And plus the interest rates being how they are, a lot of people are not getting loans or applying for loans. And that's how the bank makes money, through loans and people depositing money in the bank, and they're catching it. So they're trying to figure out a way to change the banking system. Uh-oh, here we go.
out to Ghislaine Maxwell to gauge her willingness to cooperate with prosecutors. And we're actually hearing from Attorney General Pam Bondi on this right now here. I do want to see if we can pull that up here for us. All right, looks like we can't pull it up there right this second, but we do have a statement from the Deputy Attorney General that I did want to share with you right now here. Therefore, at the direction of Attorney General Bondi, I have communicated with counsel for Ms. Maxwell to determine whether she would be willing to speak with prosecutors from the department. I anticipate meeting with Ms. Maxwell in the coming days. Until now, no administration on behalf of the department had inquired about her willingness to meet with the government. That changes now. So again, we're learning. Blanche confirmed today that under the direction of Attorney General Pam Bondi, the DOJ is now open to hearing what Maxwell might have to offer regarding uncharged individuals who have participated in Epstein's criminal enterprise. Blanche reaffirmed the July 6th joint statement issued by the DOJ and FBI, which concluded that a thorough review of FBI files related to the Epstein case uncovered no new evidence to support charges against additional parties. There's a quote from that. Blanche wrote, namely, that in the recent thorough review of the files maintained by the FBI in the Epstein case, no evidence was uncovered that could predicate an investigation against uncharged third parties. That memo, which was signed by FBI Director Kash Patel, sparked some controversy after President Donald Trump, Bondi, and FBI leaders repeatedly said they would release all documents related to Epstein. The new outreach to Maxwell is in the hopes that Epstein's convicted accomplice, quote, has information about anyone who has committed crime against victims. Maxwell was convicted in 2021 of helping Epstein traffic teen girls. She was sentenced to 20 years in prison and has appealed her case to the U.S. Supreme Court. So we're going to continue to follow this here for you on Live Now from Fox, but I do actually have this statement from Attorney General Pam Bondi now. This was the beginning to that statement we read you from the Deputy Attorney General, Todd Blanche. It says, this Department of Justice does not shy away from uncomfortable truths, nor from the responsibility to pursue justice wherever the facts may lead. This joint statement by the DOJ and FBI of July 6th remains as accurate today as it was when it was written, namely that in the recent thorough review of the files maintained by the FBI in the Epstein case, no evidence was uncovered that could predicate an investigation against uncharged third parties. President Trump has told us to release all credible evidence. So we're going to keep an eye on that for you here on Live Now from Fox as we do follow that breaking news. I did want to take you back out live right now as we continue to listen in here to the Federal Reserve. They're hosting this.
They're not going to release those files. They're not going to release that paperwork. They're going to question that lady, and there's no way she's going to tell the truth. She's not going to. She's not going to tell the truth, guys. They're going to question that lady and offer us something on the back end, and she's not going to tell the truth on the stand.
Any views, panelists?
Hey, what's up, Tim?
I think in the context of looking at and taking a look at regulations overall, it's an important holistic piece of, the discussion today. I do think in the context of, intermediation is one piece of the Treasury market. Certainly that is a very important activity during a period of stress. But to the point of it's a close to 30 trillion market today, growing. Intermediaries are one player in that market. Buyers and holders across all different banks is something that we need to and should consider to continue to support that market. So that's the kind of broad view, and looking at broadly regulations overall is, I think certainly the leverage ratio is a step in the right direction, but taking that big picture view as part of that holistic discussion that we're having here today as well.
Yeah. Subjected to market risk capital.
Market risk, interest rate risk management.
Interest rate risk management, right.
The proposal does cite some research, for example, by Falk Breining and Hillary Stein at the Federal Reserve Bank of Boston, showing that those dealers that were relatively more constrained by SLR provided relatively less liquidity to Treasury markets in the March 2020 event. And more recently, a Federal Reserve Board study by Mary Tian and her co-authors showed that those banks that have more headroom under the supplementary leverage ratio provided more financing, to Bill's point, in the Treasury market. So there is some research in support of what you're all saying. Other?
Daryl?
Yes, Hal.
So I understood the question basically was, let's get rid of the Volcker rule so we can have more prop trading that could actually help the Treasury market. It's the implication. Okay. Okay. So, you know, I understood why we did have the Volcker rule. It was kind of a populist measure back at the time when Scott Brown got elected in Massachusetts. So I remember the Senate hearing on this and the Democrats being puzzled about why we were even doing this. If prop trading would help the Treasury market, I would be in favor of re-examining the Volcker rule. But I want to caution everyone as we talk about all these changes, there is legislation to consider here.
All right, so just wanted to bring this to you for another moment here as we've been listening in all morning here on Live Now from Fox as the Federal Reserve is reviewing capital framework for large banks. However, we do have another priority event that we did want to bring to you here as this has just kicked off. This is going to be the Senate Armed Services Committee hearing nominations of top military leaders. All of that coming up after our final break of this hour on Live Now from Fox. Don't go anywhere.
Securities are not exempted from the Volcker rule? I think they are. Al?
Daryl. All right.
Sorry.
Norbert Michelle, Cato. Hi.
Yeah.
Sort of an efficiency question along those same lines. If we're worried about specific activities, okay, and if we're worried about source of strength actually being source of strength at the holding company level, why aren't we more worried about the capital at the IDI level as opposed to holding company level?
So let's revisit that. Anyone have a reaction on this issue of capital at the insured depository versus the holding company? Ben, you have your light on.
I think capital at the insured depository institution level is a relevant consideration, but we're looking at it today from a level that's high based on a leverage requirement that's also uniquely applicable at the GSIB IDI level, which is just not aligned with the general framework that we currently have. And so it is important to balance what's at the holding company, what's at the bank. And as I was expressing earlier, I think this rule would strike a better balance, but that doesn't mean that going lower is forever going to be a better thing. It's that it's necessary to balance all these things. So it's that this rule strikes a better relationship with the broader framework, in my view.
Yeah.
Okay, I'm watching
Shout
the
out to
hands.
you,
I'm
brother.
also watching the time. We have a couple more minutes. Yes, now Al.
Sure. Thank you. Al Moffat, JP Morgan Chase. So there's been a lot of discussion just early about the role of the leverage ratios as it relates to the Treasury market. And one thing I haven't heard from the panel is the effect on deposits. And so one of the things we saw during the periods of QE was that there was significant growth in deposits prior to the Fed rolling out the overnight RRP program. And strikes me that the changes to the leverage ratio may, reshape that into a potential next crisis. And I'm just wondering if the panel has any thoughts on the role of, particularly the value of changing the SLR for the IDI and the consequence on deposits and other low-risk activities like that, even if they are put into cash and not 30-year Treasury bonds. And just, maybe that potentially offers flexibility for the Federal Reserve in the size of the RRP program. But welcome any thoughts.
Who has a thought about this? Ben.
I was going to say the economic analysis of the proposal makes very clear that just in the past years and probably over longer periods, the degree of low-risk assets, treasuries, reserve bank deposits are much higher now than they've been in historical past. And I think that's important for the ESLR. It's also important for the basic Tier 1 leverage ratio. They have 4%, 5% structure in the prompt corrective action framework. It's been around for a very long time. When it first was implemented, I'm would be very confident that reserve bank balances and treasuries were a much smaller portion of bank balance sheets. Thinking about the overall structure of the capital framework, looking at the evolution of bank balance sheets, the degree of low risk activities that are related to deposit taking, liquidity risk management, I think it's a very important consideration.
Tiffany.
I agree. As you mentioned, Al, heightened cash balances, heightened deposits, particularly in a period of stress, it typically coincides with when also Treasury intermediation is important. But ensuring, which is why we talk about a targeted approach that specifically excludes cash, for example, because banks tend to be that shock absorber of cash and deposits, whether it be in the immediate stress or afterwards as a result of monetary or fiscal policy. And banks having the ability to support that in periods, particularly volatility or stress, is important. And I agree that both supplemental leverage ratio as well as the Tier 1 leverage ratio should also focus on that.
Yes, and I think just to reinforce that, making sure the leverage ratio doesn't impede the banking system when the Fed is doing QE and adding to those deposits that you were talking about. And that's at the Bank of England. We exempted deposits at the Bank of England when we wanted to make sure that was. So I think, as I said, I would be opposed to exempting Treasuries blanket, but I think thinking about exempting deposits at the Federal Reserve from the denominator, along with the other things, is worth consideration.
And that's a good point in that the PRA has made that exclusion as well in their leverage ratios, specifically for cash.
If I could, I just have a quick add-on that ought to be part of this discussion, and that's FDIC insurance on size of your balance sheet. They're the only measure still left where you go period end. And so one of the reasons you see repo get very tight at the end of a month is simply because everybody's calculating their balance sheet on period end. If they averaged it, you'd likely get rid of the month-end crunches. It seems to be a pretty easy fix.
Good to know. Okay, so we've run our allotted time. I just want to thank the panel for an extremely illuminating discussion. Lots of back and forth, good audience participation. I learned a lot. And I want to thank Vice Chair Bowman again for inviting us to speak here today. Thank you.
They got a break right now, guys. Real good information. Real good information. Changes to the banking system is coming, guys. It's real good information right there. Let's see. We're going to move over here to the Republican press conference. We got to check that out. I think I'm having audio problems. Let's see. Yeah, I'm having audio problems, man, bro. Wait. Yeah, I'm having audio problems, guys. Let me see. I think I'm gonna go out and come back in. Let's see what's gonna happen.
Also looking at some of the infrastructure they're looking to develop and ports that could become dual use are of concern, especially if they have something on the Atlantic. An Atlantic base of sea-based Chinese ships would greatly complicate our security picture writ large. So working across Africa, I think, to identify where China is not working in everyone's interest is important. And I think also engaging in the information domain to highlight some of these malign activities is important as well.
We also
All
spoke
right,
a
problem
little bit
solved.
about losing some of our nation partners who have been a great help to us on the continent. And we talked about looking at
technical
National
difficulties,
Guard
guys.
and the
But we
partnerships
brought
that they
back.
have in various countries, not just in Africa, but also around the world. Just briefly, could you kind of hit on the importance of developing those or using those partnerships as tools to help develop good relationships?
Absolutely, Senator. I think the state partnership program is one of the best programs we have within our department. It establishes long-term relationships. It allows engagement and builds capability and readiness for our forces as well as theirs. I think what you brought up is an interesting point, especially Nebraska, who has partners on the continent, but also with the Czech Republic, is there's opportunities that the state partnership program can bring these partners together and help burden share some of the of that effort, and so that we can use the expertise. The Czechs bring great expertise and capabilities to help train our African partners, and combined with the state partnership program, I think there are some opportunities there without a doubt.
Okay, and Admiral Bradley, short question, Mr. Chairman, please. What's your view on the importance of the space domain with regards to special operation forces, and how would you leverage that new command? If you would take that for a question for the record, the chairman's anxious to gavel me out.
Senator, I will.
Thank you very much.
A very, very fine question, Senator Fisher, which is going to require a lengthy response on the record. Senator Kane.
Thank you, Mr. Chair, and congratulations to both of you for your nominations. I just noticed in looking at your bios, you both have had in your professional career some significant experience in programs kind of with international partners. So Admiral Bradley, your posting to the Italian equivalent of their sort of SEALs, the incursori, and General Anderson, your reception of the Olmsted Scholarship. Talk about how in each instance this was important to your professional development.
Senator, thank you. I think I was most surprised and rewarded with being able to see the world through the eyes of a different culture. And as close even as the Italian culture is to America, in fact, many immigrants, a large portion of the country here, but they could still see the same event in a decidedly different way. I believe that experience both deepened my family's closeness, an appreciation for the rest of the world, but also
returned to the Oval Office, and boy, has it been historic. Together, we have secured the border, restored peace through strength, squashed inflation, supercharged our economy, and delivered on the one big, beautiful bill. America is safe, prosperous, and great again. But Democrats continue their dangerous rhetoric. That is endangering law enforcement agents. I mean, an officer gets shot by an illegal alien in New York. Do you think that's a coincidence? Because I don't. It's their policies, it's their rhetoric. You know, my question is, did their policies lead to this rhetoric and all this rhetoric lead to this attack? Ask yourself that. I'll let you be the judge of that. Do you think their policies and their rhetoric hurt law enforcement agents or help them? Just ponder on that for a minute. This week, House Republicans will return home for our annual work period. And during this work period, we are going to work with our members to take our message coast to coast, and we're going to make sure that we have the Democrats own their message, because we all know they like to weasel out of their message. And we're going to take our message from Long Island to the suburbs of Los Angeles. The American people will hear how the one big beautiful bill will benefit them. We are going to correct the truth with the other half of the truth, because all Democrats have right now is fear-mongering. They have no plan, no vision, and no leader. I'm planning to be in my district this week to speak with Michiganders, but I'm also going to be traveling with with some of our frontline members from Pennsylvania to New Jersey. We will visit actual manufacturing facilities where the workers, the American taxpayer, will benefit from the one big beautiful bill, and we'll be having conversations with that. I'm sure along the way we're going to stop at a few restaurants, maybe get some takeout, where their staff or delivery drivers will enjoy the benefits of no tax on tips. The bottom line is this: the impact of the one big beautiful bill will be felt positively everywhere, and working families, their bottom lines will be increased. Imagine how Democrat district visits are going to go. That's if they stay in their own districts. But remind the Democrats voted against securing the border. Remember that? They said, Biden said, we can't do that. No, we just needed a president who actually could do that. So remind the Democrats that it's the Republicans who are actually unleashing American energy. You know, putting money back into our economy, making us energy independent again, expanding the child tax credit. And I hear all that fear-mongering about, the rural hospitals are going to shut down. We actually created a rural hospital fund that can actually, the monies go to these hospitals. They don't have all this bureaucracy in between. Wow, that's a solution for a change, but you won't hear the Democrats talk about that. Generational investments. We made generational investments in our national security. No tax on overtime, no tax on tips. Every single Democrat voted to kill millions of jobs. Give federal benefits to those who never should receive those benefits before. Remember, the Democrats are making sure that Medicaid is not there for the people who need it most by allowing the waste, the fraud, the abuse to actually continue and to give it to illegals over Americans who need it more than anything. And take those $1,000 of paychecks from hardworking Americans. Remember, they voted to increase every single working family's tax rate. I'm so sick and tired of hearing, oh my gosh, it's a tax rate for the rich. No, it's not. Think about this. This is a fact, and I'm curious if you've asked any of the Democrats this. They voted to raise a taxpayer's income who makes $48,000, which would be in the 12% tax bracket. They voted to raise the tax bracket from 12% to 25% on 40 if you make $48,000. I don't know, any of you think $48,000, is that a tax break for the rich? A tax incentive for the rich? No, you're taking money from working class families. Make the Democrats own. Ask them why they voted for the biggest tax increase in history. Ask them why. I don't think these meetings are going to go very well. Now, I hope the Democrats are home and the local press will hold them accountable, and to explain why they voted to kill American jobs, especially when they're already somebody who voted no, but notice every Democrat takes the dough. It's ridiculous, and we will continue to bring these fallacies to life. We will continue to correct the truth with the other half of the truth, and the fear-mongering from the Democrats has got to stop. Now, to talk about this and the importance of the one big beautiful bill for people in her district with me is Congresswoman Jen Kiggins. Thank you.
Well, thank you so much for including me this morning in your press conference. I'm Congresswoman Jen Kiggins, and I proudly represent Virginia's 2nd District, which is home to a large percent of veteran population. In the country, we have about 6% of our population who has served in our great military. And in my district, we have more than twice that, about 13%. So I'm here today to talk about the veteran perspective and the wins for the veteran community in the one big beautiful bill. I am a veteran. I served as a Navy helicopter pilot for 10 years of my life. I am married to an F-18 pilot who served for 20 years. And I'm also very proudly a Navy mom to a future naval aviator. So the people in my district, we are regular, everyday Americans. We just put service to country first. And not only if you are a veteran, but if you work with the veteran community and the defense community in my district, the wins in the one big beautiful bill are important to us. We are hardworking. We are business owners. We are small business owners. We are parents. We are moms and dads. We are people who care about community safety. So the wins in this one big beautiful bill from the economy side, the extension of the tax breaks, the no tax on tips and overtime, the wins that we know our veterans will feel more in their bank accounts. We're used to living on fixed income like we did in the military. We know that each and every penny counts and how hard we have to work to earn our money. We want to keep more of our paychecks. We want our veterans and all Americans to feel like they have more in their pocketbooks. So those are the biggest wins for the veteran community. The border security piece is important because we care about community safety. And we know that every state is a border state, even Virginia. So we care about the people that are around our neighborhoods, that are around our kids' schools, that are watching our families. That community safety piece is important. And knowing that we have a secure border, knowing that we're not letting people from the terrorist watch list, that as veterans, we have concerns about who is in our country, who is here to do us harm. But I think most importantly, the biggest wins for a lot of us in the veteran community was that $150 billion Defense Plus up. So many of us joined and signed up to serve again in our great military for our great country because of the chaotic withdrawal in Afghanistan. We saw weakness on the world stage. We saw what it looks like when our country doesn't prioritize peace through strength. The world is a very dangerous place. And now as a military mom, really, I care about that issue. And so many people in my district, so many of our children are serving, so many of my neighbors and friends. So for me, that peace through strength piece is the most important piece. And we're seeing Republicans put our money where our mouth is and prioritize quality of life, quality of service initiatives for our military. We're seeing next generation strike fighter funding. We're seeing money for 16 more ships being built. There's $9 billion for quality of life, $29 billion for shipbuilding, $16 billion for shipyards and depot, which we know are in need of repair, $9 billion for air superiority. We need to prioritize this peace through strength part, and that's what this one big beautiful bill does. During the Biden administration, we had defense spending at an all-time low. We know that in times of our greatest peace, defense spending is about 5 to 6%. President Trump has not only agreed to do that for our country and for our military, but also he's encouraging our allies to do that, and we're seeing them get on board with that too. So I can't just emphasize enough the importance of prioritizing defense spending and what this big, beautiful bill does for that. You know, as Republicans and as veterans who care about how much money we have, we also want to make sure that we are not wasting money. And the programs, the reforms that we've put in place for Medicaid is important. We know that we want to keep that program for people who need it the most. We have plenty of veterans who are disabled, who are Medicaid recipients. I want to make sure that program is there for them. So the reforms we put in place are so important. But it's certainly a privilege to be able to represent, again, a district that has one of the largest veteran populations. These are great wins for the American public, great wins for the veteran community, and I'm very proud to be a part of this effort. Thank you so much.
Great job, Jen. Over the weekend in New York City, an off-duty Customs and Border Protection officer was shot in the face during an attempted robbery by 2 illegal aliens. These 2 criminals were allowed into our country by the Biden administration, where they both have gone on to commit multiple crimes. Assault, kidnapping, larceny, and now attempted murder make up their rap sheet. Senseless, dangerous sanctuary policies put these criminals back on the streets after their numerous arrests, enabling them to wreak havoc on innocent Americans. The damage done by the Biden administration's deliberate open border policies cannot be understated. We are still feeling the consequences of it today. But President Trump, DH Secretary Noem, and Border Czar Tom Homan are turning the tide. In my state of Minnesota, ICE arrests of illegal aliens have doubled since President Trump took office. And while the local worthless media in my home state tries to spin that as a bad thing, the brave men and women of ICE are getting the worst of the worst illegal aliens off the streets of Minnesota and America, restoring safety and security to our communities. As these officers enforce the laws, they face an 830% increase in assaults. To the ICE agents risking their lives to keep us all safe, thank you. To the Border Patrol agents and custom officers securing our border, thank you. The one big beautiful bill supports their efforts by giving them the tools they need to continue this critical work, including more ICE officers, more Border Patrol agents, more border wall, and more detention space. These resources strengthen and make permanent the great success that President Trump has already had securing the border and deporting criminal illegal aliens. The One Big Beautiful Bill delivers historic border security wins. It delivers historic border security wins, and we're all safer for it. With that, the Majority Leader.
Thank you, Whip. Well, it's been a very busy first 6 months working with the Trump administration to deliver critical wins for hardworking families across. Would do if we got a Republican White House, Republican Senate, and Republican House. And of course, the One Big Beautiful Bill really is the epitome of so many of those victories, but that's not all we've done. The president has already signed or has on his desk 31 different bills that have been passed by the House and Senate on the desk of the president, almost all of which have been signed into law after today, maybe all 31.
Hello, Bill Sanders. How you doing? Appreciate you for joining me.
Track, reversing the damage that was done by Joe Biden in 4 years. What the Democrats did working with Joe Biden, not just to increase inflation, increase interest rates, to increase regulations and rules that stifled the ability for small businesses to grow. We've been working hard to reverse all of that. And while we are celebrating all of these wins, we are not tired of winning. And the American people aren't either. That's why this week we still have more bills on the House floor, but we also have a lot of work being done in our committees. The Appropriations Committee this week is taking up 3 more appropriations bills in full committee. Tom Cole and his members have been doing an incredible job of getting their bills out of committee. The House has already passed over 60% of all government funding over to the Senate. And this week, we're going to see something that hasn't happened in years. The United States Senate is finally taking up a House appropriations bill. That should be something that's always going on in Congress, where you see the House and Senate doing their jobs together. But Chuck Schumer, for years, refused to participate in a normal appropriations process because he wanted shutdowns. He wanted chaos. It's one of the reasons the Democrats lost the Senate, is because the American people didn't want that dysfunction. And John Thune promised there would be a new day in the United States Senate, and Leader Thune is delivering on that. And one of those commitments he made is that we would have a normal working appropriations process, and they're actually doing that this week, moving the Milcon VA appropriations bill and continuing to move more of the bills that we're sending over from the House. And so as the American people see Washington working for them for a change, we're also going to be going during this district work period and explaining to the American people what's been in a lot of those bills, because the Democrats have been lying over and over and over again about tax cuts for billionaires. They're talking about hospitals closing. Everybody in America is going to die, according to every Democrat. And of course, when the American people look at what's in those bills, they're going, wait a minute. You know, the waiter and waitress in America who averages $32,000 a year is going to get about $1,700 more dollars in their pockets. That's real money for working people. And every Democrat voted no. You know, so while they're going back home and explaining and lying about the bills, we're going to start panning out across the country, telling the truth about what really is happening in the economy for working families. And we're proud of that. We're not done delivering, but I think it's important that we take some time to talk about what we've already done and delivered as we continue to move more bills. Like I said, a lot of work being done this week in committees. Energy and Commerce has taken up the NIL bill. You're seeing Judiciary focus on that report. It's been covered pretty well, but I think there's a lot more to the story about the Russian collusion hoax that started under President Obama, and some of those facts are finally starting to come out. You know, it's interesting to see Democrats want to talk about Jeffrey Epstein all of a sudden. For 4 years, Democrats hid and covered up the Epstein files. They did. They had it for 4 years. And Trump's in the courts right now trying to get a lot of that information unsealed so the American public can see it. But we're going to continue pushing for that transparency. Our committees are going to keep working to deliver more results for American families. That's what we've been doing. That's what we're going to continue to do while Democrats just vote no. They hide, they lie, they try to talk about what they would do if they were in power. But of course, everybody knows what they did when they were in power. They moved a far left socialist agenda. They're about to elect as their new party leader a socialist Marxist mayor of New York City. And half the Democrats, they all want to meet him and take selfies with him, and yet they're not sure if they're going to endorse him or not. But the bottom line is that's where their party has moved in Washington, in New York. But that's not where America is. Republicans are delivering for Americans, for hardworking families, all across the political spectrum. And that's why this economy is finally starting to move in the right direction. Our speaker, who's never slowed down, who's never accepted failure as an option, the man who continues to work and is so patient, listen to our members, and then ultimately delivering with President Trump on this great agenda, is our Speaker, Mike Johnson.
Thank this leadership team and all of you. Good morning. Thank you. Representative Kagan's doing an extraordinary job for Virginia and our military families and all of the issues she works so hard on. Thank you for all that hard work. I tell you what, it's been an exciting 6 months. Sunday, as you all probably know, marked the first 6 months of the Trump presidency, the second term. The 47th president has had an incredible run. We're on a winning streak. America's hot again. We're bringing back strength and prosperity and capitalizing and delivering on all the campaign promises that President Trump made on the campaign trail and that all Republicans did by extension. We're really proud of that. And I tell you what, history is going to record this to be one of the most consequential, extraordinary first 6 months of any administration ever, because we have unified government. The voters in this country gave Republicans the chance to turn this mess around, and we are. So we have the White House and the Senate and the House, and we're using it effectively every single day. And here in the House, we've kept pace with President Trump's extraordinary momentum. He never sleeps, and so we don't get to either. We've been codifying his executive orders at a record pace. We're cementing America First policies into law. We're enacting the full scale of the Trump administration's agenda, with the passage, of course, of the One Big Beautiful Bill, sort of a capstone of the first 6 months. And we've accomplished so much in just that time period. And I think the key is we've done that with unity. As you all have noticed, it's very deliberate. We work very closely, hand in hand, the Senate and House Republicans, as one united team. That's kind of an innovation in Washington, but a very important one. And we've demonstrated that that unity is how we deliver. There's no majority in the history of this body that can wield power unless it stands together. And so I work really hard. We all do. This leadership team does every day to keep everybody rowing in the same direction. This morning at our weekly conference meeting, we discussed the upcoming schedule, given the Democrats' endless efforts to politicize the Epstein controversy and that whole investigation. I want to be clear about this. There's a reason behind what we are doing here. We have a responsibility, actually a dual responsibility here, okay? I've been on record very clearly that I believe in maximum transparency. I think every single House Republican will say the same thing. In fact, they've told me that publicly and privately. They talk about this. We want maximum transparency. We also understand the other part of that duty is that we have to protect innocent victims, okay? We have to do both things at the same time. What do we mean by that? Look, involved in the Epstein evil, okay, which is what it was. Let's call it what it was. There are innocent victims of those unspeakable sex crimes, okay? Some of them were minors, some of them were not. When the Epstein records are turned over to the public, which we must do as quickly as possible, we have to also be very judicious and careful about protecting the innocent. I think everybody in the country should understand the necessity of that. It is the standard. I used to be a litigator. It's the standard in the court of law and the courts. It's the standard in law enforcement. Anyone who's served in law enforcement understands the necessity of that. It is the standard with government agencies. We protect the innocent. So we cannot be careless in an open release like that. You have to be very careful. The president himself has said that he wants maximum transparency and all credible evidence to be turned over to the American public so that everyone can make their own decisions. We're owed that. And we want any individual who's been involved in any way in the Epstein evils to be brought to justice as quickly as possible. And the law should be brought down upon their head. We're unequivocal about that, okay? We have to make sure that the credible evidence is revealed, and we're doing that. The president has made a request to the courts in the grand jury testimony and the files there, for example. And the court should turn that over. and that will be a continuing and ongoing quest. Now, what we refuse to do is participate in another one of the Democrats' political games. This is a serious matter. We are not going to let them use this as a political battering ram. The Rules Committee became the ground for them to do that. We're not going to allow them to engage in that charade anymore. Why do I call it a charade? Because the Democrats are trying to play gotcha politics right now when, as the leader just pointed out, they don't have any moral high ground on this at all. They controlled the Department of Justice for the last 4 years. Has anyone forgotten? They had all these files the entire time. They sat on everything Epstein related for 4 long years while President Biden was in office. You could draw your own conclusions as to why, but we've been intellectually consistent the entire time. And I want to say this about my colleagues Ro Khanna and Jim McGovern and Hakeem Jeffries and so many others. They've tweeted about Epstein countless times in the last 2 weeks, but go back and look at their social media accounts, we have, and their public comments. They had exactly 0 posts on the subject for the last 4 years of the Biden administration. Interesting, isn't it? We all understand that the America First agenda and the American people are best served by putting an end to the Democrats' sideshows. And that's what we're doing by not allowing the Rules Committee to continue with that nonsense this week. As was noted, we've got tons of very important work going on here. The leader just gave you a small sampling of it. But we're done being lectured on transparency by the same party that orchestrated one of the most shameless, dangerous political cover-ups in the history of this country or any government on the face of planet Earth. If the Democrats want to talk transparency, I'm happy to rewind the tape. 366 days ago, President Joe Biden was unceremoniously forced off the Democrat ticket. Everybody knows why. Even after millions of Americans had already cast their primary votes for him, the self-proclaimed party of democracy threw out their nominee, the sitting president of the United States, for his disastrous debate performance. On the debate stage, President Biden revealed to the American people what Democrats in Congress spent 4 long years trying to hide, that the President of the United States of America was in rapid mental decline and unable to continue serving as the leader of the free world. I'm going to say that again. The man holding the most powerful office on the face of the earth, who we now know was being propped up by his staff and Democrats in Congress, was in rapid mental decline. It was as shocking as it was dangerous, and they all participated in it. Nearly every single one of the Democrats who shamelessly attempted to pull the wool over our eyes still holds office today. You ought to be chasing them down the hallways asking for their responses on that. We released a 14-minute long video yesterday with just a small sample of the countless receipts of the Democrats at every level spending this fantastical lie to the American people. I encourage every reporter in this room to go watch that. You ought to use the clips and you ought to go ask them about it. And remember that the same Democrats who lied to us for years are now trying to convince you they stand for transparency. They participated in one of the greatest political scandals in all of history, and the House Republicans are not going to allow this to be whitewashed from the historical record. We'll continue to investigate and shine light on those who perpetrated this and provide answers directly to the American people. Now, President Biden's mental condition was poor, but his legacy of achievement in office was even worse. And I've said many times, after those 4 years of Biden and Harris, every single area of public policy was in a disastrous state. In Congress and the White House, we've been hard at work from day one of this Congress, day one of the Trump administration, trying to undo all that damage of the last 4 years. And we're laying the foundation for what will make our country safer, stronger, and more prosperous than ever before. The American people gave President Trump a clear mandate to enact his America First agenda, and Republicans answered the call. To date, we've enacted 50 of the president's executive orders, from reining in bureaucratic waste, fraud, and abuse, to passing common sense legislation, to delivering our once-in-a-generation legislative victories through the One Big Beautiful Bill. Let me give you a quick summary. Americans asked for secure borders and safer communities, and Republicans delivered the largest investment in border security and interior enforcement on record. And with the Halt Fentanyl Act and the Lake and Riley Act, we're making sure American communities are safe from deadly drugs and illegal aliens that have taken far too many lives. The American people asked us for bigger paychecks and more affordable gas and groceries, and we delivered on that too. We delivered the largest working and middle-class tax cut in the history of the United States. And we've torn down Biden-era regulations like the California EV mandate that was just madness, and worked against working families and American energy dominance. The American people demanded fiscal sanity, and Republicans delivered again. We passed more than $1.5 trillion in spending cuts so the government can begin to live within its means again. All of this is real, positive change for American families. The kind that they are going to directly feel in their bank accounts, they're going to see it in their neighborhoods, and they're going to count on it for years to come. Any of these individual feats as standalone bills would have been considered historic achievements by any Republican Congress. And we got them all done, all together, in one big, beautiful bill. And the more the American people hear about that bill, the more they like it. There was a Harvard Harris poll that recently surveyed the individual titles, the individual pieces of the big bill, and they found that 17 of the 21 major proposals polled had a majority of support. That's including things like reducing federal spending and imposing common sense work requirements on public assistance. But while the American people continue to learn about the bill, they'll also begin to feel its positive effects because we did this on a very aggressive timetable. As you all know, we put it on an ambitious timeline to be delivered. Many in this room said it wouldn't succeed. You wrote about it. I read all that. That's fine. We said we needed 6 weeks to craft our House budget resolution, and we passed it in February. We said we'd pass our House version of the One Big Beautiful Bill by Memorial Day, and we beat that deadline by 4 days. We said we'd pass it through both chambers and get it to the president's desk for signature by July 4th. And what happened? We had a big, beautiful signing ceremony at the White House on Independence Day. It was a historic day, and it's a testament to what this House Republican Conference can accomplish when we remain united and working towards a common goal. Last thought here on closing note. This is the last leadership press conference before we enter the August district work period. Around here, people call it the August recess. It is not that, okay? So I know that lots of people in the press corps are going to be able to enjoy some downtime with friends and families, and we commend you for that, but House Republicans aren't going to get to participate in all that stuff because this month of August is not a vacation. This is arguably the most important work month on our calendar. Why? Because our members go home, they connect with their constituents in person, they host roundtables with local businesses and organizations, they meet with community stakeholders and local officials, really, really important components of the job. And frankly, they need to cut through the false and misleading claims about the One Big Beautiful Bill from the media and the Democrats. As I mentioned, the more people know, the more they greatly favor the bill that we passed. And House Republicans are going to spend the month highlighting how it will positively impact our districts and our communities. With that, I'll take a few questions.
Mr. Speaker.
Chad.
Good morning. You say yesterday that you were in lockstep with the administration on the Epstein files, but it doesn't seem that you're in lockstep with all of your House Republicans. Thomas Massey just saying in the past hour that this is going to come back and bite Republicans. What do you say to those schisms inside your conference here?
I say Thomas Massey is the one trying to bite Republicans, okay? I'm not quite certain what his strategy is.
But it's just not him. I mean, otherwise you guys wouldn't be calling off the week tomorrow. You'd be able to put your rules on the floor. I understand the issue with the Democrats.
Yeah, no, I just explained why. We're not going to play political games with this. We've all been very clear and transparent. The House Rules Resolution sets a good standard and requires all credible evidence to be released, and that's exactly where the White House is. There's no, as I've said many times over the last, as I've said many times, there's no daylight between the White House and the House. You have to allow the legislation to ripen, and you also have to allow the administration the space to do what it is doing. The president has said clearly, and he has now ordered his DOJ to do what it is we've all needed DOJ to do for years now, and that is to get everything released. So they're in the process of that. There's no purpose for Congress to push an administration to do something that they're already doing. And so this is for political games. I'm very resolute on this. We can both call for full transparency and also protect victims. And if you run roughshod or you do it too quickly, that's not what happens. But I'm convinced that the DOJ is going to do their job, the administration is going to do their job, and we'll do our job. And so we'll see to it. Yes, ma'am.
Thank you, Mr. Speaker. Just to follow up on that, I know before when you were asked whether or not you would back Mr. Massey for re-election, you didn't give a direct answer. He had some harsh things to say about your leadership yesterday related to the Epstein files. Have you made up your mind whether or not you would support him or back him against a parent judge or back him?
So here's as the leader of my party, I lead the incumbent protection program. Okay, that's my job. I go all around the country. I travel endlessly, incessantly. I have to raise over $300 million to do that, and we want everybody to come back. And some people, I try to protect them from themselves, you know. They kick and scream and bite their own colleagues. Some people seem to enjoy trying to inflict political pain on their own teammates. I'm not going to address anybody individually, but I'll tell you that some here are much more frustrating than others. There's a small, tiny handful but one in particular who's given me lots of consternation. I don't understand. I don't understand Thomas Massey's motivation. I really don't. I don't know how his mind works. I don't know what he's thinking. Thomas Massey could have brought his discharge petition any time over the last 4.5 years. Over the last 4 years of the Biden administration, he could have done that at any time. And now he's clamoring as if there's some sort of timeline on it. It's interesting to me that he chose the election of President Trump to bring this, to team up with the Democrats and bring this discharge petition. So do I have some concern about that? I do. But you know, in me and my way, I try to follow Ronald Reagan's 11th commandment, never speak evil of another Republican. My gosh, it's hard to do sometimes around here. I also try to follow the scripture. You know, it says, bless those who persecute you. So let me just say about Thomas Massey, could you just accept my Southern, bless his heart? Okay, I don't know what else to say about it. We're for maximum transparency. We're engaging in that right now, and we don't need political games. Yes, ma'am, over here. Yes. Wait, I was pointing at her. Go ahead, sir.
So health insurance companies are requesting 15% premium increases for next year. They're citing the expiration of the care subsidies. Are Republicans thinking about this? Is there any possibility that they would look at extending those subsidies or any other things to decrease health insurance?
I think that goes to the end of the calendar year, so we'll have discussion about the issue later, but it hasn't come up yet. I mean, but it's on the radar. Back row, yes.
Two questions. First is, did the president or anyone in the administration ask you to delay the resolution until after recess?
No, but I, as you all know, I speak to the president multiple times a day on a typical day, often, always. And what I know about the president's heart on this is that he agrees with everything I've said here today. He wants maximum transparency, but he's also very insistent that we do not subject people who have already been victims of unspeakable crimes to further public scrutiny. And it would be a very dangerous thing to put those people's names out or to do a release of information in a way that is haphazard where they could be easily unmasked. And so you have to be very careful about how you do that. I think we have a moral responsibility to do that. We have a moral responsibility to expose the evil of Epstein, and everybody was involved in that. Absolutely. And we're resolved to do it. But we also have an equal moral responsibility to protect the innocent. And that is a fine needle to thread. And we could all give ourselves easy political cover and come out and do something in a haphazard fashion, but I would not be able to sleep at night because I know our legal responsibility. I understand what the legal standard is, but more than that, the moral standard, okay? So we're going to do this, and we're going to do it expeditiously. We're going to do it the right way. What is popular isn't always right, and what is right isn't always popular. I had an 8th grade teacher tell me that one time. I carried it with me my whole life. We're going to do the right thing here. And the American people at the end will see that we did that in the right way and on the right timetable. Yes, sir. Wait, hold on, wait a second. What'd you say? Wait, did she say it?
She did earlier.
Wait, come up here. I didn't hear.
You gotta say it loud.
Stand right here and tell them. Tell them. Last question.
Last question.
Yes. Yes. Thank you. Wait, over here under the clock. Yes, sir. Yes, sir. Yes, sir. No, behind you, right here. Sorry. Go ahead.
Thank you so much, Mr. Speaker. Russia is still bombing Ukraine, and a lot of Ukrainian civilian people are still dying. Do you consider sanctions on Russia before the 50-day period?
We were talking about sanctioning Russia, but I think the House and the Senate agree that the White House, having given that deadline of 50 days, we need to allow the Commander-in-Chief and the administration and the Secretary of Defense and the Pentagon to do what they're going to do, and we'll see how that plays out. But I can tell you, the appetite here is that we've got to bring accountability to Vladimir Putin and make this war cease. We need peace over there. It's gone on too long. Too many innocent people are dying, and we don't want further American involvement in this at all. But I do think what NATO is doing and our allies around the world may be effective. I think we've all had enough of it, and we hope it comes to an end soon. But we trust the Commander-in-Chief. He's restoring peace through strength. This is a big part of that. Thank you all so much.
All right, that's it, guys. Appreciate y'all for watching me. We gotta let the world know what's going on. That's why I do this, guys. Give my little reaction to it, but we gotta let the world know what's going on. So now I'm going to switch over here to Jerome Powell.
Is going to be very different and even more effective. So I think it's really hard to know. That, of course, there are optimists who feel like it's going to make everybody much more productive. And there are those who think it's going to replace an awful lot of jobs right across the income spectrum, white collar, blue collar, and everything. So I just don't know. We don't have a house view on that, but this is going to be a very important question.
I appreciate y'all comments and the different perspectives of what's going on. But yes, we got to let the world know what's going on, and you can make your own opinion on what you think about all this.
Saying that the U.S. economy and the global economy is going through this profound change, akin to the end of the Bretton Woods era in the 1970s. And don't you owe the American people some sort of explanation for what we're going through? I mean, I noticed earlier this month when you talked about Bretton Woods a little bit, and you said that Bretton Woods, the Fed staff had to change how the dollar movements of the dollar was impacting the economy. Are we going through something like that now? That are you having to change how you do monetary policy? Is it that fundamental a change underway? Thanks.
It's certainly a time of real change. From a geopolitical standpoint, from a trade standpoint, from an immigration standpoint, you see this not just here but everywhere. So there's quite a lot going on. It doesn't change the way we do monetary policy in the near term. But and it doesn't change our objectives or what we need to do. And these things are not really our issues. They're really issues for elected governments. All of those issues are really for elected governments. But there's no question it's a time of real change, and very hard to see where that goes. Will it be? There have been many things written about how it's going to be a more inflationary time. That's possible. It's not guaranteed. AI could cut in the very other direction. AI could make people much more productive and push in the other direction. Both housing services and non-housing services have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or some or all of the effective tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about responding to a deterioration in economic activity, let's say? How should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
Hi, and thanks, Chair Perry. Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjust it over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you end at a higher rate at end 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments of where your short-term neutral rate is? Why are you on a slower path now?
So I would focus most on the nearer term. As you get out to the later years, it's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate, for example, at this meeting. So and those things are probably slow moving. So I think if you look at what's happening here since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April, after the March meeting, that substantially higher tariffs were likely. And then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time. And what you see is an accumulation of individual assessments.
But you say in the statement that risks have diminished. On that front, but the July 9th, drop dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that. They do. So and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the world will be over.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down. And that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Thank you. Chris Rugaber at Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back to roughly 2% despite the tariffs. And I guess I also wanted to ask about, cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data, including this morning, that have been pretty weak. Do you see any concerns that, the economy is weakening and that is a reason to cut rates going forward?
So we do, of course, monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5%, 2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of, basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market, and that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very slow continued cooling, but nothing that's troubling at this time. But we watch it very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that there are concerns inflation will rise, but there is the alternate scenario that tariffs would create demand destruction and slow growth sufficiently, and that would perhaps keep a bit of a lid on inflation. Do you see odds of that scenario? What kind of odds do you see of that scenario coming true, and how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place?
So this is very much the conversation we had today and yesterday. There are many different scenarios, many combinations of scenarios where where inflation does or doesn't prove out to be at the levels we think, and where the labor market does or doesn't soften. And I think what you see people doing is looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for any of the rate paths, I think, that you see in the SEP. And, we do this once a quarter. It's a hard thing to do particularly at this time. But it does reflect, if you see somebody writing down, a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
Thank you. Mr. Chair, I wonder if you could describe for us some of those scenarios. How do you get to a place? I'm noticing that the uncertainty levels in your forecast are very high. How do you get to a place where you have the confidence in the outlook for, say, inflation and or growth or the unemployment rate? How many months does it take, and what do you want to see in the data to get to that level of confidence to actually reduce rates off the restrictive level?
So it's very, very hard to say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see to the extent to which they do over coming months. And I think that's going to inform our thinking, for one thing. In addition, we'll see how the labor market progresses. So at some point it will become clear. I can't tell you exactly when that will be. And meanwhile, we'll be watching the labor market very carefully for signs of weakness and strength, and tariffs for signs of what's going to happen there. And of course, there are many developments ahead. Even in the near term, developments are expected on tariffs. So I think we don't yet know with any confidence where they will settle out. We have an estimate, and I think all estimates are now pretty close together, but it's again highly uncertain.
When you say estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
What you start with is what's the effect?
The economy worse. It's a slap in the face to working people who voted to bring down costs. Now introduce Vice Chair Ted Lieu.
Thank you, Chairman Aguilar. This morning,
Guys, we looked at the Republican side, so now we got to look at the Democrats. We got to look at both sides. They're doing the same thing that the Republicans did that we watched about 30 minutes ago. Now the Democrats are doing it. We got to give them their, what they take is too. Let's go.
Inflation has continuously increased. The most recent report has inflation increasing above expectations to 2.7%. Core CPI increased even more to 2.9%. And what are congressional Republicans doing? Nothing. In fact, it's even worse than that. They are actually ending this week early because they're afraid to cast votes on the Jeffrey Epstein issue. The Rules Committee is not meeting because they're afraid to cast votes to release the Epstein files. So you've got this Epstein issue affecting congressional operations and making sure that the congressional Republicans don't work on trying to lower costs. So this is an epic cover-up, right? This is a cover-up of epic proportions where you've got the majority party literally having us leave Congress early and not having the Rules Committee meet because they don't want to deal with releasing the Epstein files. We should release the Epstein files. It is what Donald Trump campaigned on. It's what Attorney General Pam Bondi talked about this February when she said the Epstein client list was, quote, sitting on her desk right now. Why don't we have that client list? And these are the questions the American people keep asking, and the story is not going to go away because at core, this is an issue about underage women who were sexually abused and assaulted. Attorney General Pam Bondi should not be protecting Jeffrey Epstein's legacy, nor his clients, nor should congressional Republicans be doing the same. With that, it is my honor to introduce our amazing field general for the DCCC, Congresswoman Susan DelBene. She's done a fantastic job, and she's going to discuss what we talked about this morning.
Thanks.
It doesn't sound like a group that's very confident in the policy that they passed, so they want to rig the system. But there should be a response. We can't let Texas go unanswered, and it's our belief that we should do whatever we can to protect democracy. We shouldn't stand on the sidelines while Republicans unwind districts in order to consolidate power to give Donald Trump even more ability to threaten our democracy and set aside the rule of law.
In 2018, Democrats flipped the House by 40 seats. One reason it was such a big number is because Republicans thought they were smart when they did gerrymandered redistricting and made a bunch of Republican districts that were sort of Republican, and they thought they could win. Well, they lost them all in that wave. So Atlas Intel, one of the most accurate pollsters last term, came out with a new poll showing Democrats ahead +10 on the generic congressional ballot. So I dare Republicans in Texas and Ohio to do redistricting. I dare you to take incumbent Republicans right now and make their seats less safe, because we're going to flip them.
Michael.
Thank you, Mr. Chair. It seems as though the trust deficit between Republicans and Democrats have widened even more since the March CR debate, now that they passed the reconciliation bill and decisions. You know, as a member of leadership and as an appropriator, I'm just curious, your thoughts heading into recess. How are you feeling about the appropriations process when you all come back? There won't be a lot of time to try to keep the government open. How are you feeling about just where the appropriations process stands? The Senate hasn't passed any bills. The House has only taken up 2 bills. They were party line votes. Just kind of take a step back and give me a state of play as we head into recess.
It's a pretty broken problem. It's a pretty broken system right now, the appropriations process. I'm not going to lie. This is a place where, and I think Kevin McCarthy, kind of started to break this process when he put.
Hold on, guys. I'll be right back.
On the committee, he did that to try to become speaker and to hold the gavel, and we're suffering from that consequence now. The committee's always been a place where reasonable people come together, disagree, and then try to find some common ground and use the appropriations and budgeting process to find common ground to meet the needs of our constituents. We're struggling with that right now, and in the room you see that. Rosa DeLauro is an amazing leader. Tom Cole has a lot of respect, but when you continue to give power to Donald Trump and Russ Vought, who says the appropriations process should be less bipartisan, you're really lifting up some pretty dangerous actions and rhetoric, and we're seeing that. So it isn't just about the rescissions bill, it's about do we have a process or not? Do we trust that the executive is going to spend the money that we allocate? Article 1, Section 9, Clause 7, no money, but in consequence of appropriations. Like, do we stand behind that or not? And I think that's a question for our Republicans colleagues that they're going to have to mull this August, and we hope that they come back and feel a little differently than they have in the past. Appreciate the question. Allie? And then.
Are you concerned at all about the strength of Republican fundraising, and do your members need to do more in terms of giving dues or donating different items?
Look, I'll take the first try at that, and then I'll let Chair DelBene. We need to do everything we can to gain the majority. Everything. Every single member, every way, every possible opportunity we can to help the team. That's what this needs to be about. And I would even argue some of this redistricting, discussion needs to be in that frame too. I understand that people serve different communities and different constituencies. If we have an opportunity to push back against some dangerous behavior that Texas is doing, we should do it with the single focus of making Hakeem Jeffrey speaker and protecting democracy and restoring some sanity back to this place. So every member should be giving dues, helping out, helping a colleague, doing town halls in other districts, filling the need that exists to drive our message and to communicate that we stand for rural hospitals. We stand for people getting health care. We stand for affordable living and an opportunity to make a living and realize the American dream. Those are things that
Back, guys.
and that we need to focus every member's attention on that.
Just add that public sentiment is with us. I've been across the country talking to folks. Folks are outraged and scared, frankly, about what's happened under this administration, and Republicans who have just let it all happen. But they rewarded their biggest donors with a big bill to tax breaks for the wealthiest and the well-connected, and they saw a benefit from that. But we have grassroots support across the country. It's strong. And when we have great candidates who are talking about the issues that matter on the ground, issues like lowering costs, making sure that people have health care, these are the issues that matter to folks in our districts. And that's absolutely, people are with us, and that's absolutely why we'll take back the majority.
Republicans are saying that your calls to bring out all the Epstein files are essentially disingenuous because it's very energetic to have all the Epstein files released now, but in the last 4 years of during the Biden administration, those calls weren't there. Can you respond to that?
I think that's false. Vice Chair Lieu has been talking about this for a lot of years, so I'll let him speak. But this comes down to what are Republicans afraid of? What's in these documents that they're afraid of, and why won't they call for the release of them? Jeffrey Epstein was prosecuted under the Department of Justice under Donald Trump. Then he leaves the White House, and his closest friends spend 4 years amplifying theories about the case. Put up or shut up. Follow through or don't follow through. But the American people want the truth to come out, and Democrats are the ones leading the charge for that.
During the Biden administration, I talked about the Epstein files, and I noted that Trump was all over the Epstein files that were already released. There's multiple pictures of Trump and Jeffrey Epstein. There's multiple videos. There are bizarre quotes from Trump about Epstein. There are plane logs of Trump on Epstein's plane, and now we know there's this creepy birthday card. And guess what? I'm right and he was wrong, because again, Trump is all over the Epstein files. Let me just say again what I just said. There are multiple pictures of Trump and Jeffrey Epstein, right? There are multiple videos of Trump and Jeffrey Epstein. Trump is on Jeffrey Epstein's plane logs. There are weird quotes from Trump about Epstein. There are court pleadings with Trump named. And now we know there's this creepy birthday card Trump wrote to Jeffrey Epstein on his 50th birthday. So I am right. That fact checker was wrong. And why do you think we have this entire explosion now about Epstein? Because Attorney General Pam Bondi, here's the difference, went on national TV and told the American people that Jeffrey Epstein's client list was, quote, sitting on my desk right now. Where's that client list? Why doesn't she release it?
Can't take down the props. Go ahead.
So Hunter Biden on a podcast essentially blamed some of your colleagues being disloyal to President Biden for Democrats' loss in 2024. Do you think these comments are helpful?
I understand a son's love for their father. Those two have a very close relationship, so I understand the sentiment behind it. I've never met Hunter Biden. He's not a colleague. He didn't vote to cut 17 million people's health care. That's what we're focused on, so I'm not really going to get into back and forth on Hunter Biden. We're focused on the issues of the day. I understand the sentiment around what he's saying, but people are going to get kicked off of health care because of actions that House Republicans have taken here. That's the most important thing. I've said before in the past that 100 days isn't enough to run a presidential campaign. I've been clear on that. Things could have been different, but we're moving forward, and we're trying to protect health care here.
Just looking ahead to next year, are you at all concerned about your ability to focus voters' attention on the forthcoming Medicaid cuts, given that the tax provisions of Trump's bill are going to take effect that tax season?
This is a deeply unpopular bill. We know that already. We need to continue to hammer that message. And as the American people, see more information about the bill, it becomes less popular. So I understand what you're talking about. Some of the provisions going after Medicaid don't take into effect until late next year and early 2017. But guess what? Health insurance premiums are going up. Companies are making decisions because they know there's going to be less revenue as a result of $1 trillion cuts to Medicaid, the largest Medicaid cut in history of this country. So healthcare premiums will rise. That will happen early. Insurers will make these decisions as well. And hospitals are going to have to face difficult decisions on what their future looks like. Rural hospitals and clinics between now and next November are going to have to make some tough decisions. And they should be clear and honest with their constituents and the public as to why they're in this position. It's because House Republicans cut $1 trillion out of Medicaid. And so look, the task has always been, hard. The task has always been about what represents what's best for the American people. But this is something we know is deeply unpopular. People love and respect Medicaid and Medicare, and these are programs that face cuts under Donald Trump and House Republicans.
I was just going to say the premium proposals out there right now, premiums, healthcare costs go up to 75%. I said in my opening remarks. So people are looking, this would take place next year. People are feeling the impacts already. And so this isn't about everything being delayed. It's about costs going up for people right now.
Last question. Back. Go ahead. Yep. Yep. Well, one of the lessons we learned wasn't just in the spring, but this kind of started in December, right? When we had a bipartisan CR that the speaker put out and then backed away from because he got scared by Elon Musk. That really, kind of startled all of us. When you, in our world, when you release a CR, when you post it and put it up in public, it's a deal and you support it. So for the speaker to back away from that, that continued, and obviously it became a smaller CR in March. But I think it did set the course for some of the
during the Biden administration, those calls weren't there. Can you respond to that?
I think that's false. Vice Chair Liu has been talking about this for a lot of years, so I'll let him speak. But this comes down to what are Republicans afraid of? What's in these documents that they're afraid of, and why won't they call for the release of them? Jeffrey Epstein was prosecuted under the Department of Justice under Donald Trump. Then he leaves the White House, and his closest friends spend 4 years amplifying theories about the case. Put up or shut up. Follow through or don't follow through. But the American people want the truth to come out, and Democrats are the ones leading the charge for that.
During the Biden administration, I talked about the Epstein files, and I noted that Trump was all over the Epstein files that were already released. There's multiple pictures of Trump and Jeffrey Epstein. There's multiple videos. There are bizarre quotes from Trump about Epstein. There are plane logs of Trump on Epstein's plane, and now we know there's this creepy birthday card. And guess what? I'm right and he was wrong, because again, Trump is all over the Epstein files. Let me just say again what I just said. There are multiple pictures of Trump and Jeffrey Epstein, right? There are multiple videos of Trump and Jeffrey Epstein. Trump is on Jeffrey Epstein's plane logs. There are weird quotes from Trump about Epstein. There are court pleadings with Trump named. And now we know there's this creepy birthday card Trump wrote to Jeffrey Epstein on his 50th birthday. So I am right. That fact checker was wrong. And why do you think we have this entire explosion now about Epstein? Because Attorney General Pam Bondi, here's the difference, went on national TV and told the American people that Jeffrey Epstein's client list was, quote, sitting on my desk right now. Where's that client list? Why doesn't she release it?
Can't take down the props. Go ahead.
So Hunter Biden on a a podcast essentially blamed.
Hello, Wallace. How you doing?
Being disloyal to President Biden for Democrats' loss in 2024. Do you think these comments are helpful?
I understand a son's love for their father. Those two have a very close relationship, so I understand the sentiment behind it. I've never met Hunter Biden. He's not a colleague. He didn't vote to cut 17 million people's health care. That's what we're focused on, so I'm not really going to get into back and forth on Hunter Biden. We're focused on the issues of the day. I understand the sentiment around what he's saying, but people are going to get kicked off of health care because of actions that House Republicans have taken here. That's the most important thing. I've said before in the past that 100 days isn't enough to run a presidential campaign. I've been clear on that. Things could have been different, but we're moving forward, and we're trying to protect health care here. Go ahead.
Just looking ahead to next year, are you at all concerned about your ability to focus voters' attention on the forthcoming Medicaid cuts, given that the tax provisions of Trump's bill are going to take effect that tax season?
This is a deeply unpopular bill. We know that already. We need to continue to hammer that message. And as the American people see more information about the bill, it becomes less popular. So I understand what you're talking about. Some of the provisions going after Medicaid don't take into effect until late next year and early 2017. But guess what? Health insurance premiums are going up. Companies are making decisions because they know there's going to be less revenue as a result of $1 trillion cuts to Medicaid, the largest Medicaid cut in history of this country. So healthcare premiums will rise. That will happen early. Insurers will make these decisions as well. And hospitals are going to have to face difficult decisions on what their future looks like. Rural hospitals and clinics between now and next November are going to have to make some tough decisions. And they should be clear and honest with their constituents and the public as to why they're in this position. It's because House Republicans cut $1 trillion out of Medicaid. And so the task has always been, hard. The task has always been about what represents what's best for the American people. But this is something we know is deeply unpopular. People love and respect Medicaid and Medicare, and these are programs that face cuts under Donald Trump and House Republicans.
Last question. I was just going to say the premium proposals out there right now, premiums, healthcare costs go up to 75%. I said in my opening remarks. So people are looking, this would take place next year. People are feeling the impacts already. And so this isn't about everything being delayed. It's about costs going up for people right now.
Last question. In the back. Go ahead. Yep.
Thank you. What lessons have Democrats learned from the spring spending fight? And do you think that your party and Senate Leader Chuck Schumer need to do anything differently going into this administration?
Well, one of the lessons we learned wasn't just in the spring, but this kind of started in December, right? When we had a bipartisan CR that the speaker put out and then backed away from because he got scared by Elon Musk. That really, kind of startled all of us. When you, in our world, when you release a CR, when you post it and put it up in public, it's a deal and you support it. So for the speaker to back away from that, that continued, and obviously it became a smaller CR in March. But I think it did set the course for some of the dysfunction and craziness that we've seen here under this dome. From our perspective, look, we are united against these terrible cuts. House Republicans are looking to cut programs that everyday Americans rely on, looking to cut the Department of Education. I'm heading over to the appropriations bill where they're going to continue to cut our park system and introduce more pesticides and make it easier for corporate polluters to get by. Those are the things that House Republicans stand for. So I think it's pretty easy for us as we weigh our decisions here on how we proceed. The burden is on Republicans. Ask them what their plan is to get a majority vote. Right now, House Republicans and Senate Republicans aren't even on the same page. Get them to let you know what the funding levels are and what their path to a reasonable appropriations process looks like, because they're clearly listening to Russ Vought and not working in a bipartisan way as we have in the past. Thank you so much.
So that can.
There we go. We did both sides. We did the Republicans and the Democrats. So now we're waiting for Trump. He's meeting with the Philippine president as we speak. And I guess they're going to do a briefing on that as well. Let's see. I guess we're waiting on that. So I appreciate y'all for joining me. I think I'm ending right here. We heard both sides, which that's basically, you know, what they say anyway on both sides. So I appreciate y'all for joining me. Everybody that comment, I really appreciate y'all. I like the different comments, different perspectives. Nice chat, nice chat. I thank y'all for coming over here and rocking with me. I love and I appreciate y'all. To the next one, I'm out.